Welcome to the Modern Wealth Management Educational Series. I'm Chris Demetropoulos, and I'm a Senior Advisor for Modern Wealth's Chapel Hill, North Carolina office. Joining me today is Larry McManus. He's the Managing Director of the Chapel Hill office. Larry, can you introduce yourself and give us your history regarding long-term planning?
Chris, it's great to be with you this morning. So you and I both have been in the investment advising business for the last 20 years, and we've seen a lot of individuals and clients that have needed long-term care eventually. One of the things that I've done to get back to the community is the last 15 years I've been on the board at Carol Wood's continuing care retirement community. So I've gotten to learn a lot firsthand, not only how those organizations run, but of the 500 residents that we have on campus, how they end up paying for this. And typically it's either they're investing and paying for it themselves out of their, pension, Social Security, and investments, and or a combination of long-term care insurance as they progress through independent living to possibly skilled care or assisted living.
So I know we'll be discussing the importance of planning for long-term care. And before we get too far along, can you explain what long-term care is and why someone would need long-term care insurance?
Yeah, so in general, most people don't realize that 75% of Americans, according to the National Institute on Aging, will need some type of assisted living or skilled care, what we used to call nursing homes, during their retirement years. So typically, that's about all of us. So I think everyone out there knows either grandparents that have been in a facility or needed help, or had somebody come in and help at home with medical needs or daily living needs. That's a fairly high statistic. So the other place that I think when we talk about long-term care insurance, it's actually probably more important for those who are working. And I talk to a lot of clients, usually in their late 40s or 50s, which is their higher income earning years, that's a critical time to have long-term care insurance. Because as you and I both know, you had a client that, fell off a ladder and was a quadriplegic. I've had a client that was in a car accident and was also a quadriplegic. And the fact that long-term care insurance was there, albeit a different type of policy back when these accidents happened, it really helped the family out as they adjusted to, a new world, kind of moving forward. So long-term care insurance isn't just for folks who are retired and looking, into their golden years. It can also be a supplement and a big bridge for those who are working.
Great. And so we're going to focus hard on the slide here. Can you talk more about the continuing of care timeline being shown on that chart?
As most people hit 50, you start to realize that you're running out of time at work to make sure you got enough in retirement savings. And then eventually you may be caring for parents. And what we talk about as a continuum of care is that for most folks watching this series, we're all independent living. We're all independent living in our homes. We're able to go in, we go out, we go shopping, we go to work, we take trips. But as we age, what we call our travel footprint gets a lot smaller, right? And as we get older, we may need different services that lead up to, help with independent living that may end up going into assisted living or even into skilled care. Functionally, it's when we're going from independent to being dependent again on somebody to help us. And that's kind of the continuum of care that we show on this chart is that, and this is a simplified version of the chart, but there are a lot of services that are available to you, not only in your home, but in the community. And then if you need to move into an institution or a facility, there's a long range out there. I know we're going to talk a lot about that. Not only today, but in the series that follows.
Well, I do know, Larry, thank you for that. And as you know, most people don't plan for bad things. You had mentioned before that the National Council on Aging states that 65-year-olds usually have a 70% chance of requiring some sort of long-term care. And another chart that we can show here called the Senior Living Spectrum Chart. I know it's kind of a busy chart, but can you kind of speak to the different long-term care scenarios being shown?
Yeah, so this chart is confusing, and we're gonna break it down over time. But functionally, starting in the lower left-hand corner of the chart is functionally you're independent, right? And you're living at home at some cost. As we go further to the right along the curve, we're getting progressively more dependent on somebody else to help us. And then obviously that's not free, and that cost, tends to go up. So it tends to be a sliding scale. It's not a straight line. It can go up and down. Some of these services you may need short-term, some of these services you may need long-term, and we'll kind of break those things down. But I think today what we're going to focus on is what exactly are the basic needs that long-term care insurance covers, and then kind of where can you access that, and how do you either pay for that moving forward, and what does what does Medicare pay for?
Thank you. And so that we understand that no one really ever buys an insurance policy so that they can one day file a claim. It's not something that I look forward to, right? It's insurance for a reason. Can you speak to how we here at Modern Wealth Management can stress test your financial plan and focus on that long-term event?
Yeah, so clearly, one of the key things we do is, wherever your goals in life are for education, savings, or retirement, or taking care of yourself long-term, we build in the component around one of the, typically in a couple scenario, one of the two of you is going to need long-term care. And we can do that through the modeling software that we have here. And typically, just to kind of define what long-term care is, I like to project, what do we do every morning, right? First of all, I like to get out of bed, right? So that's number one. Number two is I usually have to go to the bathroom, right? So that's number two. Number three is I take a shower, right? That's the third one. The fourth one is get dressed, right? And then number five is going out and preparing breakfast or lunch or dinner, and then eating. So those are the five basic functions that define whether or not you need assistance, or that if you buy insurance, it'll if you have two of those issues you can't do, long-term care insurance can step in and pay for help to come in and do that. A lot of times what we see is that people initially only need help with one or two of those things, and they're able to get that care in home. And then as whether it's disease or injury or just getting a lot older, you tend to need more help in more of those sections. So long-term care insurance is one way to do that. The other way is to self-insure or have enough assets to cover that, or hopefully, not depending upon, children or family to be there to do that.
Touched upon the cost of long-term care and insurance that you use for it. You kind of talk about what it costs for individuals and some comparisons of plans in the past.
So the cost of long-term care insurance is good. It's going to vary on a lot of things. I think the key things that people need to understand is that where you live geographically in the United States is going to be a big component of it. Typically, what we see is in the Northeast of the U.S. And down through the Mid-Atlantic tends to be more expensive than the Southeast. And Florida is probably the least expensive, right? So the same level of care, whether it's delivered in Florida or in the Northeast, we can see big price differences, right? And a lot of that's because is cost of facilities and real estate. It's accessibility of healthcare deliverers, people that actually, do this every day. And we see that also as we go across the United States, right? There are varying degrees. So I'll give an example. A personal example is that my aunt and uncle who live in Connecticut, that's just where they happen to live. I mean, the facility that they're in is about $30,000 a month. Now, my aunt is and has full-blown dementia, so she's in a dementia care unit. And my uncle is in a skilled care unit because he's had multiple TMI. So, that level of care, say here in North Carolina, in central North Carolina, would probably cost them around, $20,000 to $22,000 a month. So that's a big difference on a monthly basis, for somebody who's there for, they've been there for at least a year. So, I mean, that's a lot of money. And we know that Florida tends to be cheaper than that. So, and that's, somebody that's moved into a facility and that's where they're living. I think one of the things that we we guide clients on is that if you're living in a home and you're moving into a facility, you're not going that benefit of the home or the sale of the proceeds from the home are actually, can go to your long-term care insurance. So, I mean, sometimes that might be your long-term care policy is the sale of your home at some point. So I think the other things that you think about is that like my mother, for example, just would prefer to stay at home, and that cost can be covered, right? I mean, with daycare, there's daycare facilities. We could bring somebody into the home. There may be community services. Typically a lot of the counties in the country have a senior living plan that you can tap into, and there's resources there. But as I've told my mom, at some point, Mom, I'm not going to be able to coordinate your care in your home, and we're probably going to have to move you into a facility, which would facilitate selling our house because we don't need our house anymore. But then we have funds to pay for whether she's in assisted living or she needs skilled care. And there are policies out there that can just cover that, where you can stay at home as long as possible and then move over to a facility. And there's wide ranging facilities on, services and what they're trying to address, whether it's a physical need or a medical need, for the individual.
We want to discuss more about the history of long-term care and how that has changed over time.
I think, the interesting thing is I remember my parents, when my grandfather had to come out of the hospital, and it was evident that he really needed either assisted living or skilled care. He really needed skilled care. My grandmother, who was also in her 80s, could not deliver to my 89-year-old grandfather that care. So I remember my parents volunteering that, we had a hospital bed in one of the bedrooms, and, my grandparents moved in and he died in our home. Right. And my parents, along with us to a lesser extent, but predominantly my parents were delivering the care to my grandfather and to a lesser extent my grandmother. That typically, because we have become so mobile in this country, has gone away, right? So most people have to either, we had insurance companies that started coming along to say that they could create an insurance product to cover those risks, right? So if you have parents today, the policies that were issued in the 70s and the early 80s are radically different from what was morphed into the 1990s. And then again, the policies that are out there today are very different. So if you have got somebody that's got a long-term care policy, a parent, or even yourself, the big thing is to understand is, when do you get a hold of the policy and see when it was purchased? Because, for example, my wife bought her own policy, 20 plus years ago. And that in today's world is the Cadillac. It's unlimited. She gets a fixed monthly amount until she dies. I mean, those policies don't exist anymore because the insurance companies were losing money on those. The policy that I purchased, which was about 15 years ago, has a maximum benefit cap, right? So once it exceeds or gets to the amount of insurance I purchased, for that, then the policy is exhausted. A lot of people are concerned that, hey, everyone thinks they're going to be part of the 25% that never needs help. And no one wants to use that. So we now have policies that have morphed into that have a life insurance component. So should you never need long-term care and you just pass away, there's a life insurance benefit that gets paid back to the estate. And then the other way it works is that let's just say you have $250,000 worth of life insurance coverage as part of the long-term care policy, the policy will allow you to use up to the 250. And functionally, when you pass away, the life insurance activates and then it just takes its money back. So the history has changed a lot over time. And it's really, when somebody says, hey, I have a long-term care policy, or if it's mom or dad or your grandparents, understand what it is. I think the other misconception is that Medicare steps in and pays for a lot of this, and that's just not the case. Medicare pays if you're hospitalized, and Medicare pays for short-term respite care. If you break your hip or you you've got the flu and you're in the hospital for a couple of days, you need to be set up a rehab. That is paid for by Medicare, but month to month staying in a facility is not. Now, Medicare does pay for or contribute to hospice care, but typically that's not long term, and hospice care is typically short term. I mean, there are exceptions to everything, but typically it's a short term stay from a hospice standpoint. So there's not a lot of government assistance out there.
Hopefully our discussion has helped give you a better understanding of what long-term care is, who needs it, and why it's critical to plan for. We discussed self-insure or insuring the insurance itself. If you choose to insure, what type of insurance do you need and how much do you need? If you want the best type of insurance and the right amount for, at least for the premium. Look for a future educational series on this topic where we dive even deeper. Thank you for joining us at Modern Wealth Management Educational Series. If you have any questions for our team about planning for long-term care and how it impacts your financial plan, start a conversation with us by using the schedule a meeting link in the description below. If you like this video, please like, share, and subscribe.
The views expressed represent the opinion of Modern Wealth Management, LLC, an SEC-registered investment advisor. Information provided is for illustrative purposes only and does not constitute investment tax or legal advice. Modern Wealth Management does not accept any liability for the use of the information discussed. Consult with a qualified financial, legal, or tax professional prior to taking any action.